Growth investors focus on stocks that are seeing above average financial growth. But finding a growth stock that can live up to its true potential can be a tough task. Part of that problem is that the market generally only recognizes these stocks in the late stages of growth. But that's when these stocks usually carry above average risk and volatility. In fact, betting on a stock for which the growth story is actually over or nearing its end could lead to significant losses. With that in mind, in this video, and per the request from SnowFire, we're going to talk about a growth stock, Merck. And then, per the request from LKZ, we're going to talk about when is it time to sell. So let's take a look. In general, nothing is more important than earnings growth, as growing profit levels are what most investors look for. Double-digit earnings growth is highly preferable, as it is often perceived as an indication of a strong prospect and potential stock price gains. For Merck, the historical earnings per share growth rate is 7.2%. However, expectations are that earnings for Merck will grow at 18.7% this year. If realized, that rate will crush the industry average, which is expected to be about 2.7%. The asset utilization ratio, also known as the sales to total asset ratio, can be an important indicator in growth investing. This metric shows how efficiently a firm is utilizing its assets to generate sales. Currently, Merck has a sales to asset ratio of 0.55. This essentially means that the company gets 55 cents in sales for each dollar in assets. With an industry average of about 0.53, Merck is slightly more efficient. Sales growth of a company is also paramount to investors. Merck is relatively well positioned from a sales growth perspective, with the company's sales expected to grow at about 11% this year versus the industry average of 2.8%. I understand that this is a cursory view of the fundamentals of Merck, but at least by these metrics, Merck looks to be a reasonable prospect. But realize that these are expectations for Merck. So, with that in mind, let's go take a look at the charts and see what they indicate. Before we get to the chart for Merck, I want to quickly go over my perspective on investing. And I hope you've heard me say this before. What is most important about investing and making money is not losing money. You've all heard the pundits talk about that you cannot time the market and that it's the time in the market that's what's important. But whether it's because they are ignorant or they are actively trying to mislead you, the pundits never talk about the studies that show investors actually do better if they are out of the market when a stock market crash occurs. So it is really more important to focus on being out of the market at the right time than being in the market at the right time. So this is why I show this picture of Warren every once in a while, because it's very insightful. You need to take care of the downside because the upside will take care of itself. So please take note of this message. Okay, let's go take a look at the charts. While we look at the chart, LKZ has asked me about selling with a post that goes something like this. I'm always worried about getting a one-day washout and need better discipline on putting stop losses, as you never know. Would it be good to look at a stop loss on a weekly or monthly MACD for a particular stock, or how do I decide when to sell and take a profit? First of all, it's never a bad thing to take a profit. More than just the money. Taking a profit is proof that your system works, and it also builds more confidence in your system. So I take profits, big and small. I don't discriminate. But I no longer use stop losses. I simply let the charts show me. And yes, I look at the monthly, the weekly, and the daily. It just depends on what my goal is. As for when I sold Berkshire B shares, I was using the daily chart. But perhaps I was a bit early because the weekly chart shows more upside. So did I leave some money on the table? Perhaps. But it was a profit. And as you should know, I'm a little bit more concerned these days because of the melt up in the market. So I tend to pull the trigger a bit more quickly. Now, going here to the chart, this is a 20-year monthly chart on Merck, and the symbol is MRK. And for disclosure purposes, I do not hold any shares in Merck at this time. Now, simply looking at the price chart, something that kind of pops out at me here is the tops there in late 2000 and then the top in late 2007. Those were relatively sharp. There was a sharp top right there, an interim chart. Now, on the way up here more recently, we see that the topping process, at least here in 2014, 2015, and then 2016 into 2017, and currently they're rounded. So I'm not sure if the chart has simply changed or if these are just stair steps on the way up, but I'm a bit suspicious about the current level here. We're closing in on that all-time high that was set back there in late 2000. But in my mind, whether it's a top in a permanent or a temporary condition, I'm a bit suspicious of this level here. So I'm going to say that perhaps things are topping now and I might be out. But let's go take a look at the MAC. Now, looking at the MAC, we've got this rounded top here. Once again, we had the rounded top here as well as here. And of course, in late 2007, it was a bit sharp, and then late 2000, it was also sharp there. But I'm going to go with the recent tops. Also, the thing that sort of sticks out in my mind here is that in the last 20 years, the MAC, both fast line and slow line, have not been above that 5 level. And that's relatively high, perhaps, for Merck. So in my mind, I'm going to go with the probabilities. And I believe that the probabilities are that Merck is over, no matter what those fundamentals say. Again, those were expectations. And right now, the chart's telling me that it's starting to stall up here and it's at an elevated level. Looking at the histogram, definite top rounding there, but then the downside, there's pretty sharp drop off. Back to the price rate of change. First time over that 25 level here in the 20-year history. Once again, fast line coming through that slow line. So I'm going to go with the odds and the probabilities and say perhaps it's time to go. Into the RSI, once again, we went up there to that level. That's not the only time we've been above 80, but definitely recently things are sliding as they did here and as they did here. Moving into the stochastics, this one doesn't look too bad, but we've been in this elevated territory here all of 2019. So sooner or later, stock market gravity is going to take hold. Volume looks fine, and the Williams also looks pretty healthy. Up here in that overbought territory, that was supposed to be a straight line, but you get the idea. And it could stay up there sawtoothing for much longer. But only two of these oscillators look good, while the other oscillators are telling me to be cautious, and the price chart is telling me perhaps it's time to go. So it just depends upon your time frame as well. So I take a look at the monthly, the weekly, and the daily, but I do that all the time, whether I'm looking to buy, looking to sell, or doing sector checks or whatever. I'm always looking at all the charts. But you can find your favorite and you can use your own system. Just stick with it. And so for today, that's Chew Dog Charts, and I'm out.